Then here it says, we see people using XRP ETFs primarily as a broader crypto allocation, an asset to mix in with Bitcoin and Ethereum exposure. XRP is one of the most established, largest, and most unique crypto assets on the markets, and investors clearly want exposure to it in their portfolios. And it mentions JP Morgan.
And all of that. Our hope is Clarity Act would, I think that would mean a lot. When it comes, like we talked to Goldman, we talked to JP Morgan. One of the biggest challenge is they're on their own book, they cannot hold crypto because there's no clarity on what's the classification of Bitcoin or Ethereum. Is it a security or is it not? But the moment Clarity X is released, I think we'll see massive buying power.
But we're going to definitely go over some juice today. So first off, I want to take a second and just give a shout out to everybody and just take a look back at how the week started off. We had over 5 members in the community this week pass fully funded challenges. If you are new to this community and you have no idea what this is the prop firm route of becoming a funded trader, where you have these prop firms that'll give you access to capital if you pass a testing phase for them that lets you manage capital on behalf of the prop firm, and then you get a profit split of that capital once you become a funded trader and you actually trade the capital live. Long story short, for those of you all who are new, maybe you're in the DeFi space coming into our trading community, CYPRX and trading is the foundation of CYPRX, right? So learning how to trade, building digital skills, and actually learning how to make money and doing it week after week after week and showing other people, because myself and Scalper are just normal guys, that if you apply the right data and the right sound risk management and the right sound psychology approach, it's possible. And literally week after week, if you've been in this community now, I can't sit here and say that all these members have kept their funded challenges because that's another hurdle that they have to overcome. But do we have the ability to see results in terms of just passing challenges alone? Absolutely. Absolutely. And that statistic alone beats 95% of retail investors because 95% of retail investors cannot do this. Okay. Now, have we jumped up into the category of people actually taking payouts as well? Yes, we've surpassed that threshold as well. I've shown you guys my payouts. Aqua's made a payout. I'm going to show you guys screenshots right now. Like timestamps for everything that we talk about and discuss in this community. There's no gimmicks. There's no hopium. There's no hype. This is hard work and it needs to be appreciated. It needs to be talked about. And you guys deserve a freaking round of applause, right? Like, giving you guys this key, but then watching each of you take it in your own way, put the key in the door, turn the key, open the freaking door and walk through it has been an absolute blessing. So for real, when I say these things, it's not to brag or boast or put our community on a pedestal. It is to show that everyday average people all over the globe are putting in the work, putting in the elbow grease to make a change in their lives. And it is phenomenal to be the one who one day just woke up and was like, you know what? I'm going to motivate people to do this shit with me because it's happening and it's great to see it. So starting Monday, April 13th, we had Kelvin, who again had blown his funded accounts. They became funded a month or two ago, got excited when they switched over to live, got their account, went live, blew the first live account, and then just on April 13th became fully funded again. This is part of the journey. This is part of the process. I do not know a funded trader that trades off prop firms that did not blow their first 5 funded accounts. Shit at that. It's part of the process, transitioning from demo, passing challenges, and then being consistent enough over time to actually make payouts. It's just, I say this to you guys all the time. In your trading career, you'll realize that problems don't ever go away. They just change over time. They become minimal. And when you get to a certain level, you realize, oh, there's another hurdle that I have to overcome once I get here. Get it out of your mindset that losses won't be a part of your career. Just like in business, there's losses, there's expenses, there's things that you have to pay for. The goal in business or in any successful endeavor is to take 3 steps forward, 1 step back. And that is what's happening. So shout out to Kelvin. He started the week off with the phenomenal post passing a challenge. Then we have Angel. Angel's one of our CYPRX OGs. If you guys don't know Angel's story, there's a panel, or not a panel, interview that we did with him in the interview section. He worked for one of the biggest oil industries, or excuse me, one of the biggest oil companies in the United States, quit his job, became a full-time trader. I believe just this year is when he went full-time trading, but just recently he had another another 8K payout. So another $8,000 payout. You can see Angel posting this, and he's been a part of this community for 4+ years. So great to see, right? We have Jordan. Jordan, I had the pleasure of meeting in September of last year in person at the Link Up. Jordan passed a challenge this week, so really great to see the progress. And Jordan lives in California, works a 9 to 5 job. He's always sending pictures of himself at work, freaking slaving for the man, but somehow finds time to come home during Asia session, analyze the markets properly, and freaking kick ass. Oscar, same thing. Been a CYPRX private community member since 2024, passed a freaking funded challenge, right? Here we have, of course, yours truly, Mr. Aquaman, passing a funded challenge April 17th. That happened today, right? So the momentum is there. And this is just this week alone. These are all just more screenshots that I'm adding to the arsenal of screenshots that I have in my folder of now over 60 members having passed funded challenges. So this proves that the strategy that myself and Scalper teach works. You can apply it in any asset class. You can do whatever it is that you want with it. But at the end of the day, understand that it takes skill, it takes discipline, it takes courage, it takes self-belief, and not your everyday average person can do this. So the fact that you guys are here, you guys are learning, you are part of a very small percentage of individuals that are making an attempt to change your family bloodline for years to come. All right. So keep freaking putting in the elbow grease and the work. I just wanted to pay homage and give you guys, my respect, because when respect is due, I pay it. Right. All right. So moving on, we're going to go over the total cryptocurrency market cap, recalibrate what happened before we head into the weekend, and then just go off of what we need to be paying attention to next week. We'll take a look at the total market cap, take a look at XRP, of course, give some updates, take a look at NASDAQ. I want to talk to you guys about NASDAQ for those of you all who are NASDAQ traders. Maybe we'll go in and we'll look at price action if I have some time once we get to that. And then I just want to share something with you guys, two statements that were made on stage recently that are net bullish. Excuse me, and then also read a little tiny report that Ripple put out, considering that the vast majority of us hold XRP, and this was, again, just something bullish in regards to that. So I thought I'd throw that in the mix as well. But February 26th, timestamps, as always, in this community, we like timestamps. We're not perfect. I haven't gotten every call out right, and I'm one to admit that. But if anybody in this community who's been here for longer than a year can say that my win rate is probably over 80 to, in some regards, 90%. Right? And that's not hopium. That's not hype. Anybody in this community can do it. I show you guys how, and it's by paying attention to the macro. It's about paying attention to liquidity conditions and using our institutional software to monitor these trends every single week, how sentiment and liquidity shifts off the broader risk-off backdrop or risk-on backdrop, depending on certain situations. And it's possible. February 26th, back when this confrontation first started to escalate, right? I said here for you guys, because we were in a really deep retracement in crypto. This is back when crypto was hovering around $2.89, $2.6 trillion back in February, and we dropped all the way down to 2.05 trillion. Okay. Then I had mentioned to you guys February 26th, which if we go over to the charts and the total cryptocurrency market cap, this is where February 26th was on the charts. So if we go back, February 26th was right here at a market bottom. That's when I wrote this report out to you guys. All right. It's right there. What I said in this report is I said, for now, the pullback in crypto and other risk assets appears to be a correction driven primarily by macroeconomic and geopolitical uncertainty rather than a structural shift. In the broader trend, the key factor that could shift market sentiment back towards bullish conditions include softer inflation data supporting future Fed rate cuts. What did we get last week? A softer PPI figure, right? Clear de-escalation and geopolitical tensions with Iran, and stabilization in central bank policy expectations. NASDAQ almost hit a new all-time high. S&P 500 hit a new all-time high, and crypto has now started to recover, right? And we were talking about this back February 26th. Now fast forward to today's landscape, those three highlights that we had discussed would bring back risk-on sentiment, clear de-escalation in geopolitical tensions, stabilization in central bank policy, and reduced trade policy uncertainty, softer inflation data, so on and so forth. Now let's read about the landscape today, because those things have now materialized and come into fruition, but we're not out of the water yet. To navigate these troubled waters successfully, we need to understand what to pay attention to moving forward. We have more Fed speakers next week, more US data. Of course, we need to monitor the headlines as they're set to continue over the weekend with the negotiations still unfolding and the ceasefire deal on, coming up to a possible expiration date, right? There's a whole bunch of mechanics that we need to be mindful of. On top of that, does anybody remember before I read this report what's going to be happening as we enter into the middle of the year with the Federal Reserve?
We have Warsh coming in.
Exactly. Great job, Rick. We got Fed Chair Warsh coming in, and his perspective on monetary policy will most likely get the market to start pricing in information or expectations on what they think the future monetary policy is going to be. Dovish sentiment from Fed Chair Wash. Of course, he's going to be speaking next week in front of Congress. If he says anything that comes out that is perceived as dovish leaning or in support of an easy monetary policy, or at least does not push back on Fed rate cuts. Remember that previously, back in January, when he was voted in, I believe it was January 30th, he was voted as the new, or nominated, excuse me, as the new Fed chair. The markets took an absolute piss because they perceived him as a hawkish Fed president. So vice versa, if he comes out at this Congress hearing or when he gets nominated as the new Fed chair as a more hawkish leaning Fed, that's going to have a market implication. So understanding these things moving forward are going to be of key importance. All right, so we'll cover that real fast. The market today continued to lean heavily into a risk on environment so that you guys understand the current conditions and what we're living through and what to be mindful of moving forward. With both crypto and equities extending their rally as sentiment improved across the board. The total crypto market cap pushed directly into the $2.6 trillion level that we have been tracking in prior reports for over 3 months now. And correct me if anybody's on the Zoom call that thinks I'm wrong, right? I'm just going to allow your silence to verify what I'm saying. We in this community have been tracking this level for months where we specifically said if $2.3 trillion holds, the next hurdle that we need to overcome before we get excited is $2.6 trillion because we know that an institutional dark pool sits there. The rally just happened, and look at where crypto tapped straight into. No other community on earth is doing this. Right before we started seeing profit taking today, $2.6 trillion to the T, right? Level to level updates. We went from the dark pool at 2.05, popped back above 2.3, consolidated at it for a while. In previous reports, we talked about this delta held pattern where we had this higher low. We had mapped out this as a base, and we had said as long as price holds as support, that we would likely see a move and a push into $2.6 trillion. Now we're here. So what's next, right? Do we break higher, see buyers regain control, and start to make our way back and clearing some of this downside momentum up at 2.89 to $3 trillion? Or do we see a market correction based off the sentiment moving forward in the coming weeks ahead? That's where we need to focus our mindset now. This rally was great. It's phenomenal seeing everything back in the green slightly, but we are not out of the water yet. All right. The total market cap pushed directly into $2.6 trillion. And this is the level that we would expect sellers to start to begin stepping in to some extent to defend at previous levels where they became aggressive. This move was not random. It was driven by a combination of easy macro pressure and shifting expectations around monetary policy. Throughout the week, central bank speakers helped keep rate cut odds alive for later this year, especially as geopolitical tensions showed early signs of stabilization. The potential for a sustained ceasefire between the US and Iran began to reduce the fears of prolonged energy-driven inflation, which had previously been one of the main overhangs keeping markets cautious. Geopolitically, the situation still remains fluid, but slightly more constructive. A new round of talks between the US and Iran delegations is expected to take place, although nothing has been formally confirmed by the US side yet. And you can see President Trump's tweets today. Says right here, talks will go on over the weekend. So we need to be very mindful of how the markets open on Monday in regards to any announcements that we get over the weekend. And I will do my job to monitor those headlines for you guys in the fundamental chat as the weekend progresses. While President Trump expressed confidence that both sides are nearing a deal, Iranian officials have pushed back on claims that major concessions have already been made. At the same time, developments around the Strait of Hormuz have been a major driver of market sentiment. Although Iran announced that the waterway would reopen to commercial vessels, the reality has been more complex, with only limited traffic flowing through, the shipping companies remaining cautious. And so, this right here is important because if next week we see that all the optimism that we saw this week gets dialed back, what could it potentially lead to? A market correction to some extent, or more sell pressure next week than we saw this week. Because, of course, this week we saw none. Like in NASDAQ trading this week was insane. Had you have bought at the beginning of the week, you'd be up 3,000 points right now, right? So, just take that into consideration. Adding to this, a temporary ceasefire between Israel and Hezbollah appears to be holding, despite minor violations, which has helped reduce immediate escalation risks in the region. All of these factors combined have contributed to a short term easing in geopolitical stress, but the situation is still fragile and highly headline driven. The shift in sentiment was clearly reflected in traditional markets. U.S. equities rallied strong, with the S&P 500 gaining 1.2%, the Nasdaq rising 1.5%, and the Dow climbing 1.9%, all pushing towards fresh highs. S&P 500 hit new highs, Nasdaq not slightly yet. A major catalyst behind this move was the sharp decline in oil prices, down more than 10% after signals that tanker traffic through the Strait of Hormuz could normalize. The drop in energy prices helped ease fears of stagflation and allowed markets to price in a more favorable inflationary outlook. As a result, Treasury yields, i.e., US dollar, moved lower, with the 10-year yield falling towards 4.25%, nearing 1-month lows. The shift in yields directly fed into increased expectations for Federal Reserve rate cuts, with markets now pricing in a roughly 50% chance of a 25 basis point cut by year end, up significantly from earlier on in the week. Again, I want to highlight what we're going over now, April 17th. And I want to take your attention back to February 26th. So we already mentioned that there has been a clear de-escalation in geopolitical tensions with Iran. We mentioned the PPI readings that we got last week, which came out softer than what the markets were anticipating. And I just touched on how there's been a stabilization in central bank policy expectations, right? And this was from 2 months ago, almost 3 months ago now, right? So now we can see in real time the net effect that this sentiment has on markets. All of risk assets over the past consecutive couple of weeks have been bullish. Risk sensitive sectors responded accordingly, with major AI driven names like blah, 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 Tesla, Nvidia stock, all gaining higher on the week. Despite the optimism, it is important to recognize that underlying environments like this, especially this one, has not fully stabilized. Conflicting reports such as Iran signaling that reopening the Strait of Hormuz is still limited highlights just how quickly sentiment can shift. Safe haven demand also has not completely disappeared, which tells us that the market participants are still hedging against downside risk. Heading into the weekend, this is critical. One headline can change everything, and we've seen repeatedly how fast markets can react to geopolitical developments. So, looking ahead next week, we have a heavy mix of catalysts that will likely dictate the next major move. The trajectory of the U.S. economy will remain closely tied to how the Iran situation evolves and whether energy prices stay contained. On the corporate side, earnings from major names like Tesla, Intel, GE Aerospace, United Health, American Express, Protector, and Gamble, and Lamb Research will provide insight into how companies are navigating current conditions. This is important for us who trade futures, right? The earnings reports will be imperative next week for market sentiment, especially as a NASDAQ trader. Economically, retail sales are expected to show strong consumer resilience, with projections around 1.3% increase, while flash PMI data will give us clearer pictures of how both manufacturing services sectors are responding to recent volatility. Additional data points like pending home sales and business inventories will help round out the broader economic picture. One of the most important events, like Rick had just mentioned, to watch will be the testimony from Federal Reserve Chairman nominee Kevin Warsh. How many people do you think going into this weekend understand that this man is going to speak next week? And if he says something that comes out excessively hawkish or dovish in front of Congress, the market's likely going to react. And that's when you're going to see Watcher Guru say, oh, $100 million in shorts liquidated in crypto. because of this, when right here we're talking about it ahead of the time to position ourselves before the move so we understand when it happens how to react, right? That's the importance of this stuff. His stance on monetary policy, particularly around the balance sheet reduction, has been a key concern for markets. Previously, fears of a more hawkish approach contributed to a broader risk-off condition, as we can see here. February 3rd, 2026, it says, markets suddenly realized that Warsh is best described as a hawkish dove and that he may be willing to reduce the size of the Fed's balance sheet, which is not good for liquidity conditions and risk assets particularly. You can see here as well, this is from February 3rd, 2026, 8:23 a.m., right before market open. Right? I wonder what happened that day. You could probably assume that risk assets had a sell-off that day. And it says, the sharp market sell-off at the end of last week has its roots in a single political development that caught investors off guard. President Trump nominated Kevin Warsh as the next chair of the Federal Reserve, and we know that the markets perceived him as more hawkish leaning. If Warsh signals a more dovish tone than expected, it could reinforce the current rally and push markets to price in more aggressive easing, adding further fuel to risk assets. I'll pause right there. One thing I want you guys to be mindful of is that because futures markets, S&P 500, NASDAQ are more regulated than crypto, we might not see a positive reaction if continued bullish fundamentals come out for risk assets from the NASDAQ or S&P 500 because they might have already priced that in. Crypto is clearly lagging on this rally. We've merely gained a couple $100 billion. That's nothing. When crypto wakes up, it will wake up abruptly. But this recovery is nothing substantial so far in crypto. It's positive, but nothing substantiating yet. We need to be careful where if bullish fundamentals continue to come out, we could actually see an inverse scenario where buyers have already priced all this in. Buyers end up getting trapped because they're buying late into the rally, and sellers actually start showing their hand, especially if buyers start aggressively taking profit, if nothing that they've already priced in doesn't continue to develop and unfold. So just be mindful of that environment. Next week and weeks following, anytime an asset class hits a new all-time high or is close to hitting a new all-time high, you're going to see a lot of choppy price action and indecisiveness, and we are not in some like we have to continue to buy because it's going to go higher or just immediately sell because we're at the top mindset. You need to be very disciplined and very strategic with your approach to trading NASDAQ and S&P 500 in the next days ahead. I'll go over that in just 1 second, right? From a market structure standpoint, the NASDAQ has now posted its strongest performance in years, since 2013, marking its best week run since, like I said, 2013. After such an aggressive move, it's typical to see some level of consolidation or choppiness at highs before the next directional decision is made. In crypto, the focus remains clear. Price is currently sitting just below the $2.6 trillion dark pool, or resistance. If buyers can sustain momentum and break above this level, it will open the path towards the next major targets at $2.89 to $3 trillion. However, if the market fails to break through and we see sellers step back in, a pullback down to $2.4 to $2.3 trillion becomes a realistic scenario. And right now in this current environment, considering that we're not out of the water yet, I still think that that would be healthy. Overall, while the trend does remain bullish in the short term, this is still a headline-driven market operating in a fragile macro environment. Momentum is strong, but sustainability will depend on continued geopolitical de-escalation, supportive economic data, and confirmation from central bank policy. So real quick, just taking a look at next week's calendar. I'll make sure to send this report out to you guys so that way you all have it. Next week, right off the bat, we have a dry day on Monday. No major impactful reports. So Monday will be a great day to recalibrate from the weekend and just see how the markets open, how they react to any major announcements that took place over the weekend, and just regather your bearings before the week starts. Tuesday, we have core PPI. Excuse me. This is last week. Sorry, next week. Same thing. I was like, I don't know why I'm looking at the core PPI. Monday, same thing. Dry day Monday. Tuesday, we have core retail sales. We also have, that is when Fed Chair Warsh testifies. Okay. Following that, we have pending home sales, and that happens late into the session. If you're on the East Coast, it's going to be 10 a.m. Central, 9 a.m., 7 a.m. right? 2 hours behind if you're on the Pacific coast. Okay, so be mindful of that. Personally, when I see a red folder event, well, you guys know my rules. I don't trade until after 8:35. If you see a red folder event at 9, try to do the same thing. Don't trade before 9 a.m. Wait 5 to 15-minute intervals after the news comes out to see how the market reacts to it so that way you're not caught in any choppiness when the news actually comes out, right? Unless you're like absolutely A1 certified on a setup that you see. Wednesday is going to be pretty dry. Thursday, of course, we need to pay attention to the unemployment claims given labor market data insights, and we have the PMI figures as well, right? Friday, consumer sentiment and inflation expectations always play a big role. We'll be attentive to that. All throughout the week, of course, headlines around tariffs, ongoing geopolitical hotspots, of course, and any Greenland updates or any announcements from other major jurisdictions on monetary policy, we will be attentive to. As for XRP's case, real quick, in this updated video breakdown from just the other day, taking this level by level, hopefully you guys enjoy this accuracy. Out of everything that exists out there on the internet, that is one thing that I can say that we have never done at CYPRX is give outlandish, outrageous, bullish Moonboy price predictions. We've kept it realistic. We've kept it down to earth and accurate week after week after week. So I hope that you guys genuinely enjoy that, right? This is the previous update where I said if we break above $1.34, we're likely going to come up into $1.50 before we start to see profit taking or buyers exhaust. Bearish candlestick. There's a large sell volume here. And so the question is if we can hold at $1.43, turn this into support and start to see buyers become aggressive above it, when we come into $1.50, do we see sellers passively defend where they had aggressively broken support before, or do we see buyers prevail, break above those sellers, trap them at the $1.50 range, and become aggressive pushing higher? So now we are here, right? We are here on XRP. We have broken above $1.43 to the freaking T. We retested it and we came straight up into $1.50. And like I had projected, we were likely going to start to see some profit taking from $1.50 or the dark pool that sits there. Since now we are here, what happens next? Same thing. As long as we can maintain bullish price action above $1.43 to $1.34, even in a pullback environment, we are now operating in this bullish A to B move from delta to delta, or excuse me, dark pool to dark pool. Now, it would be better if we did see a pullback and buyers could defend at this first area of interest, which is going to be $1.43, to then see another move higher. But that's going to be our first bullish scenario that we're going to be mindful of. Second bullish scenario is the same thing, a deep retracement of this overarching bullish move, a drop down into $1.34, and then a bullish move back to the upside. These are going to be the next two things that we're looking for on XRP in order to see a sustainable move and rally above $1.50 into the next dark pool at $1.62 before we reassess. Anything above $1.62, just taking a look in the Discord real quick, Scalper did update the dark pools and deltas on 4/14, so just the other day. You guys can see them here. $1.62 is that next hurdle that comes in, and we also see there is a delta at $1.62 as well, between $1.61 and $1.66. So that is going to be a very key hurdle for XRP buyers if we come up into that level. To the downside, we still have $1.27 dark pool on our buy side, $1.18, and we still have the 91-cent threshold to be mindful of. Above $1.62, $1.77, and $1.97 rests. So in future video breakdowns, I'm sure we'll talk about those hurdles, but just sticking them on your radar in case we see any over weekend volatility. XRP out of the way, total cryptocurrency market cap out of the way. That leaves me one more reading, and then I'll leave the floor open and we'll talk NASDAQ for a little bit before we hop off, all right? April 17th, 2026, Ripple put this out today. XRP ETFs, the institutional era has begun. Myself and Mr. Aquaman had a podcast today, and I shared some video clips of super bullish video breakdowns and panel discussions that have come out over the past consecutive couple of days from key executives from crypto.com to BitGo to Bybit to the biggest bank an institution in Brazil, all saying super bullish things about crypto, more specifically regulation, and how when regulation comes, we are going to see institutional allocation to this space that we've never seen before. This guy right here, Chris Perkins is his name. Anyway, he's the guy that is going to be developing the crypto fund that Franklin Templeton just bought. I don't remember what it's called off the top of my head. I apologize for the ignorance, but that's who this dude is. So he's not just some random guy. And listen to what he says about how the animal spirits are going to open once Clarity Act passes.
Clarity Act, I think, is going to get done. And yes, we're navigating the final issues around yield, which kind of are ridiculous if you ask me. It's going to get sorted. And then as we approach midterms, I do think there's going to be sufficient political pressure to get this thing done. That, in my mind, is going to unleash institutional animal spirits, if there are such a thing. Obviously, retail animal spirits are a little bit different, but that really that pushes this reputational risk over the finish line. There's no more, like, that's it. Now we have codified, enshrined laws, which is going to be very, very beneficial. And it's going to accelerate institutional adoption. What does that mean?
So I thought that was pretty freaking bullish, right? That this dude just, whatever organization he worked for, just got bought for Franklin Templeton, and now they're going to be running the crypto fund for Franklin Templeton, and he's saying things like that, right? Then the other video clip right here is from this dude. This is that video from the bank lady. This is the biggest bank in Brazil, where she says that crypto is an opportunity, or this is an opportunity to see crypto not only as an investment, but also as an asset to transform the banks and the financial system. This guy right here is the guy that went on to say, crypto is super bullish and that when the Clarity Act passes, it's going to be massive. And this is Ben Z, the co-founder of Bybit.
And all of that. Our hope is Clarity Act I think that would mean a lot. When it comes, like we talked to Goldman, we talked to JP Morgan, one of the biggest challenge is they're on their own book, they cannot hold crypto because there's no clarity on what's the classification of Bitcoin or Ethereum. Is it a security or is it not? But the moment Clarity Act is released, I think we'll see massive buying power from these institutions, truly from the US. So far, they haven't really started yet because there's no clarity. Yeah.
Okay, so I want you guys to really take into consideration, because what did we just see on NASDAQ? What did we just see on the S&P 500? All-time highs because of the freaking ceasefire stuff. And what have we been saying in this community? When that is behind us, it's not fully yet, but when that is behind us and we get clarity, there is nothing holding back crypto right now, y'all. So when these institutions get the green light, I'm telling you guys with the utmost confidence, I don't have a crystal ball on when it's going to be, but we're going to see a move in crypto that is going to blow people's mother effing minds. And it's going to be the last time, guys and gals. It's going to be the last time. Because when we go to $5, $6, $7 trillion, which is going to happen, look at freaking stocks. They just added $4 trillion in less than 10 days. It's possible. Institutional money can do this, right? And they're about to get into an asset class at ground zero. Do you really think that the next pullback, even if it's $2 trillion, so let's say just as a logical, right, to prove what I'm saying, when we go to 7 trillion, the last two biggest bear market cycle pullbacks have been $2.3 trillion each. The one in 2020 to 2021 and the one that we're currently living through right now. $2.3 to $2.4 trillion shaved off. So if we go to 7 trillion and we pull back $2.3 trillion again, or even $3 trillion, we only pull back to 4 trillion, y'all. Put that into perspective. When this thing when it goes, we're not coming back down to 2 trillion. Mark my words. So buckle up. We don't have a crystal ball. That could be in a couple months from now. That could be in a year from now. But when it does happen, just know that you're going to be one of the people that's going to get to say, I bought crypto before 5 trillion market cap. Good luck getting in at any lower prices than this. You're going to be able to get in. There's still upside, but it's not going to be asymmetric upside like how we're about to experience right now. So that is something to just consider. Not financial advice, right? To each his own, assess your own personal risk. And I'm not the type of guy that's going to sit here and pretend like there isn't still downside risk across the board, because we're still in an era where certain projects are going to get chosen, certain ones aren't. We don't know what projects are going to survive. So there is a certain risk assessment that you need to do on your own behalf for your own personal finances to actually survive this long term. I know where I'm placing my cards. You guys need to make sure you're doing your own personal research on that note, which is why we, add the crypto research section for the sake of that, right? You guys can watch those videos, do your own concernment, and freaking make your own investment choices. Reading this, two highlights I want to just go over. Okay. It says here, the kind of flow persistence and inflows holding steady, even as XRP's price experienced volatility, is a signal worth paying attention to. It suggests that institutions are making considered allocation decisions and not just chasing short-term momentum. As Bitwise CIO Matt Hugan noted in early commentary on the launch period that there is a level of demand in a weak market environment. If there is this level of demand in a weak market environment, we would likely see substantially larger market demand in a strong one. Okay. Then here it says, we see people using XRP ETFs primarily as a broader crypto allocation, an asset to mix in with Bitcoin and Ethereum exposure. XRP is one of the most established, largest, and most unique crypto assets on the markets, and investors clearly want exposure to it in their portfolios. And it mentions JP Morgan, right? Well, do you guys remember the gentleman here? Who did he say he's talking to? Right? He said he's talking to JP Morgan, talking to other big financial institutions, and they're not allocated yet. When they get clarity, they're going to allocate. He said big institutional inflow, buying power. We have not seen that yet. I don't want to be caught on the opposite end of the spectrum when that buying power comes, because I was skeptical and worried about it now. I've done my risk assessment. I know what I'm willing to lose. I would rather be the type of person that says I risked the biscuit and lost it rather than I missed the biscuit because I was freaking scared of for whatever for whatever reason, right?